Bonjour Mischa, comment ça va?
Très bien, on le fait en français ou en anglais?
It's going to be in English, but I just wanted to you've got a perfect French, so I wanted to start like that. It's great catching up with you.
Likewise.
We met up like 10 days ago, 2 weeks ago at a conference in London about social and digital media in financial services. So you work at GE Capital?
I do.
Good. What's your vision of social media and digital engagement in the industry?
I think in the industry in general, it's here to stay. I think it's still growing pains, and I think it's much more about brand right now as opposed to actual dollars and cents. And I think you'll notice during the conference, it was quite difficult to get to a point where somebody said, "Oh, this is how much money we made from this social campaign." There were a couple presentations that did start to tackle it, which is encouraging, and I think that will continue. And I think the it's not really a vision, but I think the tactic that needs to be solved is how do you convert this engagement into customers, into dollars and cents, and that's a question we all need to answer, I think.
No, I would agree with that actually. It's very much social media, so marketing, branding, reputation, so listening a lot. But we need to move towards social commerce, which is more, as you said, actually, to prove the value, ROI, and insurance and the industry when you work with B2B, so businesses, it's slightly different from retail. You say social media is here to stay, so there's a big opportunity there, right?
I think there is. Certainly insurance in direct-to-consumer. I mean, they've been using this for ages in the U.S. Very innovative use of social media.
Mm-hmm.
B2B, whether it's insurance or whether it's really credit, which is our core business, I think is a bit of a different animal because you're going after a smaller population. I think the typical reaction is the CEO, CFO of a company that you're trying to reach, normally through cold calling them. Are they going to be on Facebook and
or LinkedIn?
Or LinkedIn, and I think the intuitive sense has been, hey, LinkedIn is probably a better place to reach these people. I think it's interesting in their conference, though, how many people said Facebook is actually really, and the different ways that it's being used, certainly opened my eyes a bit. When you talk about the housewife who's at home and who has a leak and goes on Facebook and says, I need a plumber in the next few hours. Mm-hmm. That does make you think, well, wait a minute, how is this going to evolve? As opposed to talking about what a wonderful cup of coffee I had this morning. Is it going to evolve to, hey, I need some advice about a $500,000 loan financing? It seems like a stretch. And I did notice shortly after the conference there was a report that came out. I don't know if you saw it. That in the U.S. Facebook has lost several million users, and in Canada,
yes,
as well, prompting some conjecture. As there's still a lot of growth in the BRIC countries, but are they plateauing?
Exactly.
So I think
starting point.
I think it's interesting to see where that will go.
Well, I would agree with you actually. But CEOs, CFOs, CXOs, are they on Facebook or Twitter? If they are they using it? Because it's one thing to create an account. It's something different to engage. There's a few examples in financial services, like Peter Aceto, the president and CEO of ING Direct Canada, who is very active there. But you need to believe and understand the medium to do it. So I think we're not there yet, Insurance, yes. Retail, lots of innovation in the US. Customer reviews, so a lot of transparency and customer advocacy. Small businesses or corporates. We saw a lot of many banks in the last few months to try to be more engaging, providing some social media features in a secure environment, if it makes sense, some kind of extranet 2.0, social enterprise. What's your views on that? What are your views on that?
I think very similar to any kind of social media efforts. Too many companies don't dedicate enough resource to it. I think it's a reactive kind of play where they say, we've got to get in here because some of the competition is getting in, and not really realizing how much effort needs to, as well as the fact that once you do go in, you have to commit to it. Very difficult to go in and then back out because you leave a digital trail, and people laugh at you. Hey, look at these guys. They tried to go in here, and so I think you do have to get in, but get in and know what you're getting into. And so that's what I would say. I think something we were talking about earlier in terms of extranets, I think it is important, what we'd said, which is you need to open it up, and you can't hold on to that data, and you can't hold on to what you feel is your proprietary information. You need to utilize that, pieces of it, not all of it, but utilize pieces of it to reach a broader audience, engage them, bring them towards you, and then you can start talking about a secure extranet or something like that where only certain of your customers have access to it. And but I don't think you can start out that way. So
No, because then you need to drive adoption, you need to drive traffic, you need to make it worthwhile, and people usually lose interest very quickly. They don't have time anyway. So you need to be pretty spot on and to convince them of the reward of doing it. Keeping it open, totally. And then you need to, your job is to convince again people who are not clients today on the values of becoming clients to get more exposure online.
What'll be interesting is New York Times and their supposed firewall approach with what they've done. And I've been following it, trying to find out what the drop-off in subscription is. And I think the last number I looked at was they had suffered maybe a 20%, 25% drop in visits. It'll be interesting to see because it's a holy firewall right now. Holy, not holy, but it has holes. The firewall has holes. And it'll be interesting to see how they advance and whether that model, I've heard it for quite some time, content providers saying we need to stick to our guns. We have the content, we need to charge for it because the business model is not working. And then, you see the Huffington Post, which seems to be making it work quite well. And so it's an interesting parallel to, I think, closed networks versus open networks, and that's an experiment that is being played on a live stage.
But again, you've got on the one hand, you've got a company which is built, it comes from the offline world and the press, and the other one totally built on social.
Brand new,
Exactly. So it's an interesting context. I agree with you. It's good actually. In terms of convincing senior management, what do you think? What would it take actually to insurance companies? Is it to suffer a major PR crisis on social media, a bad Facebook page, a greatly and highly viewed YouTube video?
The truth of the matter is, and not just insurance companies, I think financial services companies in general, and I'm not speaking of necessarily GE Capital in this context, but often it does take actually a crisis. And we've seen that over and over again, where a company doesn't realize the risk to their reputation, and it's not until that happens that finally they realize they have to invest and protect their brand, and that it costs a lot of money. I would say that I think we're fortunately investing in certain areas, and more in the basic monitoring, reputation management, those kinds of things. And so I think you've got to start there and protect your brand, and branch out from there and become more proactive in engaging your customers. But at least get the basics right. So
it's going to start from a corporate affairs again, brand point of view.
One would hope that businesses wise up to this. They probably will. The more of these major events that occur that we've seen, and you realize how much that costs a brand, eventually people learn. It does take a while, but I think eventually people learn.
They do. But social media is considered as a risk. But we manage risk, right? That's the industry, insurers, bankers.
It's ironic, isn't it?
That's our job.
You talk to risk people, and the minute you try and convince somebody, your chief risk officer, let's get involved with a Twitter account. Oh goodness, we can't have our employees tweeting. There are a lot of concerns about controls, and that is the other side of it. You do need some controls, is absolutely agreed. But I think personally the bigger danger is not being involved in that space, not having the tool set, the capabilities within your organization to respond appropriately to even an offline reputational hazard. That's a bigger risk to me, but they're both risks.
No,
so.
Totally. Again, What's the risk of? Is it better not to know that something is happening anyway and not have the opportunity to address it, or make an informed decision and say, you know what, we don't want to take part to the discussion, but at least we know it's happening there. Yeah. That's critical. Okay. Well, thanks a lot for your time. Merci beaucoup, Mischa.
De rien.
À bientôt sur Visible Banking.
Okay.